नमस्कार। विशेष वेबिनार में आप सभी का स्वागत है। आईसीपीए का एक खास वेबिनार है इंटीग्रेटेड काउंसिल ऑफ प्रोफेशनल अकाउंटेंट का, जहां स्टैंडर्डाइजेशन ऑफ ट्रांसलेशंस कॉर्पोरेट गवर्नेंस ये खास वेबिनार है जिसमें कई लोग जुड़े हुए हैं। हम उन लोगों को बारी बारी से स्वागत करते हैं और इस खास कार्यक्रम का हम आपको बता दें कि जो मॉडरेट करेंगे प्रवीण झा सर करेंगे। प्रवीण झा सर, सबसे पहले आपका बहुत बहुत स्वागत है। डॉक्टर प्रवीण झा सर,
नमस्कार सर।
आवाज आ रही है सर?
जी थैंक यू
नमस्कार। एग्जीक्यूटिव हैं और कई इंडिपेंडेंट कॉर्पोरेट से जुड़े हुए हैं। प्रवीण सर, आपका बहुत बहुत स्वागत है। और इस खास कार्यक्रम में सीएमए डॉक्टर डी मुखर्जी सर जुड़े हुए हैं। सर, आपका भी बहुत बहुत स्वागत है। आप कई किताबों के लेखक हैं और थॉट लीडर हैं और खास तौर से आईसीपीए को खास तौर से चलाने वाले मुकेश सिंह कुशवाहा सर जुड़े हुए हैं। आपका भी सर बहुत बहुत स्वागत है। आप प्रेसिडेंट है उसके, बहुत बहुत स्वागत।
थैंक यू सर।
और हम देर न करते हुए हम सीधे चलते हैं डॉक्टर प्रवीण झा सर के पास। प्रवीण झा सर, आवाज आ रही है?
जी जी, थैंक यू वेरी मच।
शायद उनके आवाज नहीं आ पा रहा है। उनसे
इट इज ओके, यू कैन हियर मी।
अगर नहीं ऑन हो पा रहा होगा तो आप उसे ऑन ऑफ करके फिर ऑन करके हो जाएगा।
या आई कैन हियर इजीली।
ओके थैंक यू।
जी सर। प्रवीण सर, आवाज आ रही है?
गुड इवनिंग, नमस्कार एंड गुड इवनिंग लेडीज एंड जेंटलमैन।
प्रवीण सर से बात नहीं हो पा रही है।
वेलकम यू ऑल
प्रवीण सर
टू टुडेस वेबिनार ऑर्गेनाइज्ड बाय द इंटीग्रेटेड काउंसिल ऑफ।
नहीं यार, चलिए डॉक्टर मुकेश सिंह कुशवाहा सर के पास आते हैं और हम ये कहेंगे कि आप ही मॉडरेट करें, तब तक प्रवीण सर जुड़ जाएंगे। मुकेश सर कुशवाहा सर, आपका बहुत बहुत स्वागत है। आप जिस बार से आईसीपीए को चलाते हैं, काफी लोगों को यहाँ पर जुड़े हुए हैं और इसी खास तौर से कड़ी में ये वेबिनार भी हो रहा है जिसमें सीएमए डॉक्टर डी मुखर्जी सर जुड़े हुए हैं और ये खास तौर पर इस विषय पर बात करेंगे। बहुत बहुत स्वागत मुकेश सिंह कुशवाहा सर।
धन्यवाद डॉक्टर प्रवीण जी। We welcome you, sir. We also welcome our Dr. Mukherjee, who is our eminent speaker on the today discussion on topic standardization of transactional corporate governance in India. And we also welcome our coordinator Manvanji from media. Dear member of the ICPA and professional colleague, on behalf of the ICPA, I welcome you all in this conference webinar. Today we need to discuss we need to understand, what is the various reporting segment under the various laws as concerned. It may be the statutory framework like Company Act 2013. It may be the SEBI regulation 2015, and it may be the secretarial standards SS1 and SS2 as mentioned in section 110(1), 118(10) of the Companies Act. So we need to understand what is the legislation various affect the standardization of the various corporate governance as concerned. We also need to discuss about the related disclosure of the related party transaction is concerned, because there are a lot of siphoning of the fund through the related party entries. So we need to focus, how we need to standardize all these things as concerned for the betterment of the good governance as in the country. Sir, we need to understand the board constitution and independence, just like audit committee is there. What will be the composition of audit committee? As per the Companies Act, 2/3 member of the audit committee should be the independent director, and chairman of the audit committee need to be the independent director. And to create the proper balance and avoiding there should not be the independent director from the promoters side is concerned. If they appoint the promoters as concerned as an independent director, it will be the unbiased, it will be the biased. So we need to take care what is the law says about that. The promotional group are explicitly prohibit from the serving the as an independent director. And also we also need to discuss about the shareholder activism and disclosure norms. E-voting is concerned, it will help to the retail shareholder for the participation of the board meeting, AGM as well as concerned. And also various rules related to consultation of the disclosure as per the stock exchange, what the disclosure, mandatory disclosure required as the company act, MCA requires some disclosure, annual returns and various forms as concerned. Not taking too much of time, I welcome once again on behalf of the ICPA as a president of this organization, and I thankful to my all the member of the board who has chosen. And today we had Dr. D. Mukherjee. He is an eminent speaker and the author of the various books as concerned. So before Dr. Mukherjee give their views, I have given some feedback, short feedback, sir, कि yes, you need to focus, address all these things as concerned for the better understanding of our viewers and participants. Once again, I welcome and thanks to all of you. Now proceed for the further discussion to our moderator, Manvanji.
Thank you, sir.
Yeah.
Namaskar and good evening, ladies and gentlemen. It's my pleasure to
जी सर,
welcome
बहुत
you
बहुत
all.
शुक्रिया, बहुत बहुत धन्यवाद। प्रवीण सर, आवाज आ रही है?
Yeah, please, thank you.
नहीं,
Thank you.
आपकी आवाज नहीं आ पा रही है। आप
मेरी आवाज आ रही है, I can hear you. Thank you very
आपकी
much.
आवाज सुनाई नहीं पड़ रही है, प्लीज।
I can hear you. Can anybody tell him, please?
आप एक बार अपने डिवाइस को बंद करके फिर पुनः जुड़ जाएं तो शायद आवाज आ जाएगी।
थोड़ा स्पीकर से के पास में आके बोलिए, थोड़ा पीछे जाके बोलते थोड़ी आवाज वॉल्यूम कम हो जाता है।
I can hear everybody. You can also hear me, I believe.
उनकी आवाज नहीं आ रही है प्रवीण सर की। प्रवीण सर से आग्रह है कि अपने डिवाइस को बंद कर।
He is totally audible to me also. I think maybe sir at your end may be problem.
No.
Yeah.
यहाँ आवाज आ रही है सर की, मुकेश सर की आवाज आ रही है, प्रवीण सर की नहीं आ रही।
Everybody can hear me.
आगे बढ़ते हम सीधे चलते हैं डॉक्टर डी मुखर्जी सर के वहाँ, और इस विषय पर क्या कुछ कहना चाहेंगे आप शुरू करें, बाकी प्रवीण सर जुड़ जाएंगे तो फिर उनसे बात करेंगे।
Dr. Mukherjee, you can proceed. He is. Okay. Shall I introduce or is it okay? Okay, now he's okay. Namaskar and welcome, ladies and gentlemen. It's my pleasure to welcome you all to today's webinar organized by the Integrated Council of Professional Accountants on the highly relevant theme, standardization of transnational corporate governance. In an increasingly interconnected global economy, harmonized governance framework across jurisdictions has become critical for transparency, accountability, and sustainable value creation. Today's session will provide valuable insight into the evolving landscape. It's my pleasure to introduce our esteemed speaker, Professor Dr. Deenbandhu Mukhopadhyay, widely known as Professor D. Mukherjee, an eminent academic leader, corporate governance expert, independent director, and accomplished author. With over 4 decades of distinguished experience across academia and industry, Professor Mukherjee brings a unique blend of scholarly depth and practical expertise. He has held several senior academic leadership positions, including Dean, Director, Registrar, and Interim Vice Chancellor, along with over 2 decades as a full professor under UGC and AITC framework. He also brings nearly 2 decades of corporate experience across engineering, aviation, steel, and power sector, and has practiced as an advocate at the Calcutta High Court. A multidisciplinary expert in finance, management, law, and governance, he is thought leader with 85 research publications and over 200 articles. He currently serves as founder and director of Inspire, independent director at Simplex Infrastructure Limited, and continues to mentor doctoral scholars, and contribute as a visiting professor. His academic credentials include PhD in finance and law, DLit in management, and Doctor of Law, along with several global professional recognitions. We are truly honored to have such a distinguished personality with us today. May I now invite Professor Dr. D. Mukherjee to share his insight. Over to you, sir.
Thank you, Praveen sir. I'm honored to be here this afternoon, and the topic I am not going to say anything about me. Whatever you told is, I think,
Thank you, sir.
I have nothing to say against that. Now, the topic of today's discussion is standardization of transnational corporate governance. Transnational. Standardization, transnational, corporate, and governance. These are the four variables are imbibed in this title of today's discourses. Before I begin with, I would like to spend a few minutes on the phrase corporate governance. Many of us are of view that since 1992 Cadbury Committee report, that Cadbury Committee chaired by Sir Arden Cadbury, that corporate governance came into limelight. And thereafter, we are very much well acquainted with Enron to Volkswagen, and today Rajesh Exports and Clambaby, Switzerland. But corporate governance, if I go back centuries, we can remember well Solomon versus Solomon and Company Limited. I don't want to, because all of us are highly learned and our audience are of learned audience here. I don't want to spend time on that particular case. On that case, perhaps there was issue of corporate governance was addressed in the United Kingdom court. And simultaneously, I can go back to the history again, because without knowing past, I think we won't be able to conclude why this corporate governance so important today, particularly transnational, or particularly for the MNCs beside all national corporate organizations. Please let us remember London General Bank case, where auditors were implicated because his lordship, he says that auditor gave the means of information but not information. So that was a very famous case law for all of us. Again, we can remember, we can go there, Kingston Cottle Mill case. Kingston Cottle Mill case is another famous, legendary case law. I think it is, history will never erase it, which says the role of the auditor, that auditors are watchdog but not bloodhound. Again, I am going to another case law, Westminster Road construction case, that is also a UK-based case, where auditors were implicated because it could not value the inventory, and there was misrepresentation in the annual financial report. Since then, now I'm coming back to this century. In 1936, this term was coined. Again, 1976, it got prominence. And 1992, after Cadbury committees, submission of report, many acts, many new laws were enacted across the globe, including our country. Now, 2001 Enron, that was the famous case, we know very well. Two companies were merged, Houston Gas and North Inter. So there was a huge, what I can say that all of us know very well. After that, many cases, if you go series by one after another, Lehman Brothers case, then India, Swattam computers, then many others. Now I'm coming to Volkswagen case. Then last 2-3 years, 24 to 26, 3 years, three famous corporate governance failure, rather I say, which have been reported. Number one, we know that case is called for this year. Rajesh Export, now it has rocked the corporate world as far as India is concerned. 15.15 lakhs crore revenue have been inflated. That is the Alice chauffeur. And then again we can see this beside this case, other two American cases are there. And one of the researcher, world recognized, renowned researcher from Argentina, Professor Lehrer, he has made a study for last 25 years, 2020 to 2025. In a quarter century, he has taken as a sample 50 MNCs from across the globe, representing 6 industries, industrial sector. 6 industrial sector: banking and finance, your power, technology, pharmaceutical, and others, and like that. And in a nutshell, he's mentioned there in his study, to refer that as on date, $2.69 billion, to repeat, $269.5 billion US have been charged as a penalty of these 50 companies. And top of that is Volkswagen, which has been settled by $25 billion. Therefore, at this point, now it is search. We should need to search our soul as a corporate governance professional. Where wrong lies? What is the problem? Where it is become a recurring in nature, even many laws have been enacted as initially, the moderator or introducer, they tried to say, in our country, 2013 Companies Act has been enacted after repealing 1956 Companies Act, where many reformation have been taken place, replacing the previous act. And most important thing is there, governance. That means, key managerial personnel, then audit committee, then sustainable committee, then induction of ESG reporting, and many others are there. So, learned introducer also mentioned that 2/3 member of the audit committee will be from independent director. Question of independent director, it came into India when Companies Act 2013 was enacted. Prior to that, this was not there. Only some nominee director or government nominee, government representative, this concept was there. And this is the way. Again, out of 2/3 independent directors, again there will be at least 1/3 will be women director. That is another, important feature of this. Now let us have across the globe. This is India. Now, in India, prior to 2013, many corporate governance failure have been reported. Some are even not reported, but still happens. Only when we're talking about that, these are about listed companies. These 50 are all listed companies. When this researcher, he did it, that these are all listed companies, MNCs particularly. So therefore, in this scenario, corporate governance means what? As already mentioned, that there must be transparency, accountability, fairness, and risk should be, elimination may not be possible, but must be at as low as possible. And ultimately to secure the interest of the stakeholders. Out of the stakeholders, the majority of them are shareholders of the organization. Now, question comes, if we go by the company law procedure or process, it is a democratic process because board is, members are elected, by ratified by shareholders. But ultimately, what happened? It is though in democracy, but it is oligarchic in nature because number of boards, member, etc., whatever will be there. There's a minimum and a maximum, or some numbers are already there. Board should not be very big also because many cooks spoil the broth. Decision have to be taken, and therefore, if the board members are, that is not a sizable one, it will be difficult for the corporate, governance to take decision. Therefore, it is done in all, and everything is okay. Now, let us address the issues as on date. That corporate governance, first of all, what does corporate governance we mean? Does corporate governance only mean regular audit will be there and annual report will be there, auditor will be disclosure, auditor will be responsible, director's report will be there, director's third party transaction or a conflict of interest won't be there? These are have to be ensured. Now, I am coming here the question with among ourselves that all things are there already in presence because many of us also are board members. We know decision process is a very nowadays also recorded, everything there. NSDL already they take care of that. From any corner of the world you can attend any company's board meeting. There's no problem. Thing is that in spite of that, why these things are happening? You can understand few days back, just last year I can remember, SEBI has issued a circular. Earlier, relative, who was the family relative were there, relative definition has been, there is a sea change. Relative, for example, suppose X is a director of an organization, whether executive or non-executive, but he has to comply with that there is no conflict of interest in any way. In that case, even your extended family members also included. That means my question is there, whenever we are enacting certain laws or regulations, is it possible to implement these things? Because framing a law is something different. Also, implementation is very, very important whenever we frame or enact any law. So ultimately what happened, that law still exists, but people are getting difficulties for, compliance or for getting, in disclosure. Similarly, if I say in this case, the 15 point, a most recent case, which rocked Indian corporate sector, that Rajesh Exports, 15.15 lakh crore revenue inflated. It has not happened one day. Does it happen in one day? According to the report, 2020-21, and it transferred 2020-26. Now, let us discuss, let us address the issues, how it happened. 15, gradually today it is now 15.15 lakh crore, 1 lakh crore. That means earlier reporting system was what there. Earlier watchdog, what they have done. Earlier SEBI regulations or heavy disclosure, what was is complied with. Earlier that, transparency in business transaction or Transnational, it's already Switzerland-based one subsidiary is there. Rajesh Exports. Therefore, whether all these norms and regulations or oversight were ensured and how it happened. Suddenly happened now, that SEBI has issued that way, chairman has been all that, I am not going to, this nitty-gritty issue. Now, at this point, my humble question, my humble presentation before this learned audience, we are all corporate governance professional. We have to find out here some kind of way forward. And way forward means, because everybody, when public people, money is involved, interested, involved in any organization, it has to be there. today now cross-border investment is also essentially required. That means investor confidence is most important. That is also part of corporate governance. Because if the investors do not find there is a transparency, there is a risk, there's no, security of their investment regarding law, order, whatever their fiscal law, corporate law, okay, transnational, that is different kind of laws which are not permissible in normal course of civic life. So therefore, we are here. Corporate law is not only the law which only involved or can be used as a tool for effective corporate governance. There are many allied laws also there. For example, when you go for in transnational, IPO, transnational, the securing capital or capital mobilization, what do? We need to take so many clearances, so many compliances. But does it compliance or are the compliance not made? This research paper, what I mentioned in the beginning, he had referred one very, very important study of Gary Becker. Gary Becker studied in 1968. He established a mathematical relationship that if the penalty is high, there is a relationship between the magnitude of penalty and expected gain from violated norms, business coming up out of the violated norms or law. If expected gains is greater than the penalty, so naturally they will continue, corporate behavior will continue to do this kind of things. Now that's why, so today giving that, can we conclude that no, then let us increase the penalty more and more and more. But again, now today, as I referred this Argentinian researcher, he again applied his mathematical model and he established that now we have to see that corporate behavior is a very peculiar. It does not depend simply mathematical, equation or mathematical functional relationship. Something we have to search for that. What he says, he developed another model, very recent one. He says, he tried to say probability and that probability of violation of law and expected gain out of that. And that is one of the index he tried to prepare, work out. Then he tried to say out of violation, what the volume of wealth some company is going to create. If that ratio is greater than 0 or 0 and 1, naturally they will continue to go on doing that. They will never state back. But my question is there, this corporate governance definitely, whenever people any law or norms, it depends on mathematics. It depends on mathematical theorem. But ultimately, when we apply it in practice, we see that something else. So now what next? Therefore, this researcher tried to tell us that let us find out, make a brainstorming session now. Gary Becker's theorem is now not at all, it is going to have throwing some light about this one. So as on today, what can be the best way to prevent these fraudulent activities which are miscarrying the investors' confidence, which are creating trouble in corporate world? And he specifically and interestingly used one very important term. He says, as our topic title is standardization of transnational corporate governance, standardization. He raised the question, when a corporate governance will be called standard corporate governance? When you talk about standard, that means some parameter will be there. Now parameter, what will you follow? Will follow ESG parameters, will follow compact parameters, will follow the parameters of other organizations like WHO, World Bank, IMF. They are also in the parameters. Will follow the parameters of our SEBI, Minister of Finance in general, Minister of Corporate Affairs, like that. Now we have to decide most, with the close eyes, you have to scrutinize, and you have to understand again that which are the most important, relevant. Gary Becker, 68, and today 26, we are talking about that. That means 32 plus 26, 58 years almost. Naturally, many of my friends can tell that yes, that behavior pattern, today's behavior pattern will be different. Naturally, Gary Becker's findings, Gary Becker's model is not going to, totally, effective to predict the corporate governance or governance behavior. Therefore, it needs to be relooked, revisited. And perhaps this Argentinian researcher, he tried his best and he developed another theory. Now, in this context, I am coming to what are the 5 parameters are so far internationally acknowledged as the parameter for best corporate governance. Number one is called accountability. Secondly, transparency. Thirdly, risk management. Next is responsibility. And next is your overall practice and internal control mechanism. Internal control mechanism, again, this researcher has given a very good idea that how it happening, this corporate governance. All of us know we have experienced something driving our own car. Driving a own car and to reach a destination, in any car, motor car, there are 5, tools or, instruments which you must have control. What are those? Brake, clutch, accelerator, your gear, and this one, steering. If we have control over all these 5 instruments, naturally, driver will be able to reach that destination. And having the control over all these 5 instruments, he can avoid also accident and reach the ultimate goal. That means profitability. Today we call it sustainability. Simply profitability, we don't call it sustainability in the language or in the parameter of ESG. We also call it TP model, triple bottom line model. There also profit, planet, environment is there, and people of course will be there. So now this triple P model, bottom line model, it is also perfect. We are talking corporate governance ultimately has to take care of this 3P if you don't go to high level mathematical model or something. So therefore, under this scenario, there, ultimately, who are the worst sufferer? Worst sufferer, first of all, country's economy, number 1. Secondly, investors. Thirdly, society at large, consumers, because when we are going to do some business, ultimately you do buying and selling or production, then distribution, selling. So therefore, all these things are going to impact the confidence of the society as a whole. So under this scenario, a question comes: if these 5 parameters, what I just told in the just 2 minutes back, accountability, transparency, fairness, responsibility, and risk management. So these are the enough, or something else more, something else we to find out. Yes, these cover all now. Let us come to the point again. Let us make some judgmental analysis. Accountability. Accountability means what I have done, what I am supposed to do, and I will always be the kind of guarantor that yes, if any wrong thing has been done, I am responsible for that, and I am the person take care of that, and I'm to, in a very raw format, yes, I am responsible to compensate that good in a nutshell. That is called accountability. Now, accountability, let us see. In corporate governance, who are the accountable? In governance, we understand, if you go by classical model of management, classical management model is the pyramidal structure, operational level, middle level, and top level. Top level is we normally call governance. Their board is there, headed by chairman, managing director. Now the separation of power and administration has been changed. Same person cannot be the chairman as well as the managing director. This is also part of corporate governance, upgradation, rather I can say, theorizing. Many organizations still they're having, but very few are there. Okay. Now accountability means who are accountable. Accountable is the board. Yes, primacy is board. Now board will do by whom? Board's hands, ears are there. Who are there? Board's ears are there. Again, compliance. Now I'm coming to compliance. Compliance means what? As per the law, yes, okay. As per the other norms, okay. As per the quality, okay. As per the purpose, objective of the memorandum association, yes, we did not violate. All these things. That's why our audit, external audit, internal audit, tax audit, any other, whatever you name call the audit. Audit has been, is not today, it's a centuries old. But if we see, I mean, in a micro way, not macro way, has audit ensured their job so long, so far? No, my answer will be simply in a no, because as many as reported scam again the result of corporate lack of corporate governance. This way, that way. If Ramalingam Raju would not have appeared at the court, who used to go to ask him that yes, his company has been bankrupted or his net worth is negative? So in that way, I must give credit to Ramalingam Raju, at least his conscience, arose and ask him to go to the court and surrendered. So therefore, audit means now the questions are asking the corporate governance question that why auditor should be there, because auditor now I just safeguard, I counter them that yes, simply you say the audit could not do the job or auditor is not there. So but you see in the London General Bank case, auditors are watchdog, not bloodhound. That means auditors are not given legal teeth to bite. So auditors are like a toothless lion. That is only my defense for my auditor friends. Because so far, I'm giving an example why auditors are toothless lion. I'm very much, very frank and very, very free about that. If I go to a doctor, what do? Doctor examine, check my blood pressure, and I am having fever. Initially, he gives tell us some medicine. After 3 years, this is the test, you come back to me, and then I'll give you proper treatment. Okay, I have done it. After come back, again he understood and I undergone treatment under him. And lastly, he has to give a certificate. Mr. or Mrs. So-and-so undergone treatment under me for so many days, and now I certify him, deem fit, and he can resume his duty. That means certificate. So auditors, my auditor's friend, please excuse me if I'm, somehow you may not like it. Auditors is the opinion, and this auditor report is not accepted as an evidence in any court of law, not only in our country, across the globe. So therefore, you are telling auditor is not doing anything, but auditor is giving certificate. They give the opinion. So opinion, one part can be n numbers of opinion. Which opinion is correct, which wrong? Again, another audit should be there for that. So therefore, I say there is a legal clause, I can say that rather fallacy, which are included here. If a law, so many laws are there. Any law in the world, whether it is a cross-border investment law, cross-border compliance law, ESG, whatever it is there today, any law says that auditor has to give certificate. Even any company's audit report we go through, we can find there, according to the best of information given to me, and the information provided by management is given, they always start with disclaimer. Now, when disclaimer is there, accountability is not there. Disclaimer, accountability are, there's an inverse relationship, if I'm not wrong. So in the very beginning, now who is to go in first level? Auditor is the accountability ensuring on behalf of the board. Now auditor again, how can be independent? Because auditors say we are independent. Let us understand very well. Though is this platform, I don't want to be so, like that. We know auditor is appointed by the board and ratified by the shareholder in case of financial audit every year. Okay. Now, after all, you're it's a very, for me also, sometimes I fumble to, say, if we think that literally the auditor has got no boss. In principle, auditor has got no boss. They are appointed by shareholder and their report is meant for the shareholder. Okay. But does it happen in reality? That also we need to search our soul. So independent director, even whistleblower, are they really independent? That is also my question. So therefore, who accountability? These are all accountability tools. Independent auditor, independent director, audit, compliance. All these things should come from independent body of individuals or individuals. But are they really independent? Number two, I've already covered that opinion and certificate. No audit report is accepted in any court of law as an evidence. Therefore, how? Privacy, they are only supposed to tell, or whatever report they give, that yes, according to what this way, that's why they give notes on accounts, or they give qualified report sometime. But what does it mean? Until unless legally, responsibility is fixed, I think not possible. Now I'm coming to the board structure. Board structure has been changed. There is a separation between one. There is no concentration power. Chairman, managing director has been, it has been done, and many cases happen. Not only in our country, across the globe, it has been done. After that, again, I am coming to the point. Suppose chairman and again can be non-executive chairman, executive chairman. Is it possible for a non-executive chairman to take care of the business, to care of the day-to-day activities, and to understand, to foresee, for setting the vision and to achieve the mission of the organization? He's a non-executive. He's an outsider. He only is a visitor, for example. Coming every 3 months, 4 meetings have to be compulsory. Board meeting, mandatory in every company. So he's that stature person. He did not, see everything in an integrated way. But what is the interest? How he will be able to play the same interest, same kind of things as an executive chairman or executive, director, vis-a-vis non-executive director or independent director? So definitely his role is specified in the corporate law or corporate regulations, or wherever it is there. So therefore, again, there is some kind of gap is there. So in this way, then as a matter of what is the risk? Risk, again, you see, it's a cumulative result of all this failure. From 1 to 9, now risk comes. What is the risk? Risk is the probability of financial injury that happened to the investor, to the shareholders, to the people who are involved in the administration, in the interest of the organization. Now, risk definitely will be there. Why not? If you have one umbrella that is not foolproof or waterproof or rainproof, you simply take it. Naturally, when rain comes, it can only be able to protect you from rain. That is a risk. So therefore, this is another point. Now I'm going to see, because our time is only 4 o'clock. I will not talk much. I think I have given enough that transnational corporate governance, we understand what is corporate governance, and transnational, what are the gaps are there. Transnational means national and then transnational. Gaps are there. Now these gaps are, I think, this 1 hour, it is very small fragment of time. I tried to make this our audience or ourselves that corporate governance itself, it is not a philosophy. Practically, it's a mathematics. And until unless our law is any country, whether it is India or abroad. Few days back also, that that airlines, Boeing 737, Alaska, that door scandal, is a 425 case. So therefore, many things are happening every day. So now corporate governance, practically, what I understand today, I beg excuse from my colleagues here, it's a white elephant practically. In a true sense, if you try to dig, every company there is this way, that way, and company they want to do it, but regulator, they are not doing the function properly. It is a chain, action. Ultimately, that risk is getting accumulated, and that's why at 2026, where so many compliance are there, compliance cost is one of the important part. When we are talking about this compliance management, always keep to mind that compliance cost is one of the important costs that had to bear by the organization. And cost means we understand more cost means less profitability. Therefore, unnecessary compliance should not be there. That is the basic philosophy of corporate governance. But ultimately, 2026, this case, once again, I want to conclude with that, leaving to the audience for question and all that Rajesh export case, is it not an again eye-opener? I'm not going prior to that. Whatever cases happened there in our country, including PNB, including many others, I'm not going to do that. This is a very, very few days back. Now, I wish to know from my friends, their opinion and their question. If I can clarify, I'll try to address, and I am ready. I'm here to know their ideas. I want to know their views also under this background. Thank you all for giving me this opportunity. I'm here. Thank you, sir.
Sure, sir. Sir, it is said that law is made to break. Always there will be a law and it will be broken ultimately. And when it comes about the corporate governance, it is from ages when there is a business, either it is for the profit or not for profit, there will be the governance in any form or the other. Now, coming back to our Indian perspective, now most of the family-run businesses, and it is growing to the next level and becoming the MNCs. So, and the mantra of our Honorable Prime Minister, MSME to become the MNCs now. It is very good to hear, but from the perspective of corporate governance, we see that there is the dominance of the founder, shareholder, or the person who founded the family members. So how can we mitigate this type of issues in terms of the corporate governance? Because they will be there, and the other persons, whoever in the board, they will not dare to challenge their point of view. So if you can highlight something, sir. We have a lot of questions, but we will not trouble you more. We will keep it some limited.
Thank you, sir, for your, my mind-blowing question. You try to, accommodate many questions in one question. You said that in a family kind of business, other way, our government mission, vision. Yeah, it's possible. Definitely, as far as India is concerned, and global and all that, of course, there I can go back to you. I started with that there is no end of that. Perhaps ending is difficult. I'm just going in 90s late. You can remember, since today we are talking about MSMEs, startup or like that. I'm not taking startup and taking MSMEs in my hand. That means small investors, small business who are thinking, they can think that. Or even and without being also, they can invest, somebody else can do that on their behalf. Please let us understand. Unit Trust of India, mutual fund, I'm going in 90s, 1998, we can remember that suddenly we woke up in the morning, we saw it's NAV has been depreciated to like this. And suddenly there's a hue and cry across the country because, it's an investor base. If you see that day, it was number one. Okay. In that day, total market capitalization out of 50,000 crore, Unit Trust of India itself has got 35,000 crore market capitalization. So rest were mostly public sector mutual fund, and after 1992, private sector mutual fund came there when SEBI was enacted, and earlier asked while Control of Capital Issues Act was repealed. Now even that today also, that means Government of India bailed out. We can remember well. So you see, whenever we are doing any kind of business, so that compliance part, whatever I just tried to highlight here, which is very, very important. Even if you take aside the governance, whosoever will be there, some promoter will be there, some investment promoter will be there, whosoever will be there. Definitely, when they are investing the money, return is a must because it's a blood. Without blood, no human being can sustain. Without profit, no business can sustain. It's a very, very obvious. But question is, profit is required, not profitability. Okay. Profiteering, rather I should say, profiteering, most important term, not profitability, profiteering, I meant. You say, this going on, and practically today I was trying to point out that our compliance, our accountability, our regulator, practically we are doing one by one. That means if today's regulation become tomorrow ineffective, if tomorrow's regulation become, that means to make the regulation is the only part of the job of the governance, or to implement and ensure. No, it's not. It is happening that way also. Therefore, the compliance has to be there, regulation has to be there, regulator has to be there. But then where is the problem? Problem is, I'm trying to say, implementation of law. That is the main problem. If there is the only problem, investor will be happy, people will be happy. If I go across, debating here in this platform forum, as you rightly said, our time is limited. We are trying to, come across, arrive at some conclusive view. View is only my will be there. Any law in India, implementation and post implementation, taking feedback, it is not as much as other few countries, not all countries. In America also it is happening, as you know, hundreds of corporate governance failures are there, as there. But still our implement, that means I used the term very beginning that our law are not having appropriate teeth. Some teeth should be there, and so that, because this research, my Argentinian friend, he said that yes, it is not now failed because people are making cost benefit analysis, and that earning is more than the risk, and therefore we can go on with that. So now behavior. Then what next? He said that no, only law implementation as a matter of fact, there is a problem all over the world. That means we are talking about transnational. We are making laws. Which law, if we go by this, which law? Income Tax Act itself is enough to ensure accountability. For example, we don't need to other act. Forget about that. I with responsibility tracking that. Income Tax Act, if you go something like that since 1961 till today, what is not there? Our Commissioner of Income Tax is a quasi-judicial court. He has been given that power. So therefore, again, my submission will be here that our recommendation from this forum should be, law should be there, accountability, regulators should be there, compliance management should be there, but law has to ensure proper implementation, and violations should have conclusive result, so that our corporation will go ahead, MSME sector will go ahead, investor will be protected, insider trading will be there, board will be functioning properly, audit committee will be doing everything, all things. But according to me, for example, I am giving another, just debating, kindly allow me debating here from little 2 minutes. We have make IBC 2016 code, we have done it. Insolvency, bankruptcy code 2016. It's a very good act. It's a very, 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 very good act. But now in IBC, we see that practically, you see that implementation, infrastructure, getting the things coming out, appointment of the credit committee and all that, so many things are there. So unnecessarily, the time is very important in anybody's life, or the corporate life, or life of an economy, or life of a government. So our law is so comprehensive. Yes, law should be comprehensive. But by the way, when one law is enacted, before going to next amendment, we need to do what is the impact measurement, impact assessment of the act or law, what we have done. Then we go for next one, and that should definitely be superior, or must plug the loopholes what was the earlier. I think there is a gap. That gap I was trying to trying to address, trying to make here well known. That gap has to be addressed.
I saw one question from the audience, C.A. Gaurav. Can it be displayed, the last question? Otherwise, we will wound up, or we will share the... Dr. Mukherjee, the question from one of our audience, we will address this and we will wound up.
How does governance standardization affect investor confidence and foreign investment? Yeah. Thank you, C.A. Gaurav. And it's a great question raised by you. You are one of the, what I can say, corporate governance professional, obviously. And it's our responsibility as a corporate governance to ensure that investor confidence has to be there. Because again, I go by this way. When investor, if you go by investing without capital is one of the most important factors of production. If you go by classical economics, land, labor, capital, organization, the term organization has been replaced by management today. So land, labor, capital. I should say labor, capital, land, labor, or capital, labor, land, and organization. Or organization should be fast, because organization has to take care of this one. Organization will make synergy of capital, labor, and market, supply chain, whatever is there. Now I'm coming to a question. Now investor, that means he has to invest. Investment, that means capital. As I'm talking to that, capital has got only two main component, two forms: debt capital or own capital. Own capital normally called equity by selling the shares, and debt means by debenture or something else. Now debt and equity, there will be a ratio. We have learned it in our school college going days. Debt equity ratio should be 2/3, 1/3, or 1/3, 40, 60. These are all for theoretical purpose. What will be debt? We have to make the debt equity, the equity capital structure such a manner which will optimize the cost of capital. Now I'm coming here, investors' confidence. Investors' confidence, how will get? Immediately when he's going to invest, whether MSME format, one company format, or a MNC, he has to take the money, so he has to take loan from financial institution bank. Now day one, he got it, day one his interest started immediately, whether he make production or go marketing, all that. Therefore, under this scenario, investors' confidence means what? Return is more very important. Until unless whether promoter, he's also investor. XYZ shareholder, they're also investor. So investor, if he does not get return, that means cost of capital and return, that needs to be trade-off. Until unless trade-off between cost of capital and return is not done, taken care of, I think investors' confidence is not possible. Because you are paying more and earning less. And that is the basic criteria when you do any, investment management decision. Therefore, investor, that is a risk also. Risk means not simply 1 year your profitability going down, next year you can, recoup it. So investor confidence is very, very important in this regard. And again, investor confidence and corporate governance, they are like a heart and lungs. Heart and lungs. Corporate governance, it is ensured who are not the practically owner of the organization, but they are the group of, I can say that agency theory, one of the theory of management, that's very, very important theory. All of us know that. So practically they are agent, they are functioning a fiduciary relationship between the investors, shareholders, and this group of managers, whether you call them director, is also manager. Okay. So therefore, until unless we address this issue, I think, again, corporate governance only, good corporate governance only can ensure that investors' confidence. And how the good corporate governance, again, good corporate governance means definitely compliance. Compliance means what? We abide by rule of the law. And rule of the law means, again I say, implementation and post-implementation result. If we see out of 100 company, 70 company, even in this case, 50, this case study, the research was been done by Argentinian friend. He has taken 50 companies all over the world, all listed companies. Out of this, he has proved mathematically 94% company, they are regularly recurring, they are violating the law. For example, this Vulcan 2015 case, we know carbon emission case, it was started. Till today, he has segregated, he has clustered that all this company, when you make the penalty, so now he arrived to conclusion that what will the penalty? So penalty has to be made. That means law has to be implemented such a manner. Law has to be made such a tooth with the proper teeth. Then only violation can be, reduced, or even maybe elimination. He did not talk about that because elimination is very difficult. Human behavior, after all, involved in any management or any governance part. That should be separately. But again, I say, my conclusion will be there. Corporate governance, risk management, already I covered. There are 5 parameters I talked in the beginning. These 5 matters, including accountability, transparency, risk management, fairness, okay, and like that. So therefore, corporate governance will be there only. You make the law, n numbers of laws are there. Today one law, again tomorrow law. We forget. Yesterday complied with that, tomorrow I have to comply with that. Again, compliance cost is going on and on. And there needs also literary also views required. Today I am learning something, again tomorrow I have to relearn something. Yes, learning is a good. Of course, I must understand our environment. But there should be limit. Even if forget, we can't remember the Income Tax Act. What was the yesterday? Today he was telling, and regulation was telling, and today something else. SEBI yesterday told something, today something else. Earlier one is not tested in the laboratory. Earlier law was, that was enacted, that was implemented. Result, we did not make any litmus test in our laboratory. So therefore, my answer will be in one sentence that law, proper law, implementation and teaching it properly accountability, then your transparency, all those things is possible only to ensure investors' confidence. Investor confidence only can ensure economic growth, because investment, without investment, whether indigenous investment or foreign investment required. And investment required means many factors are there. Beside this, many other factors, I'm not going to that. Environment is also factor. That's why ESG came into the light. But are we following that ESG? Is ESG totally implementable everywhere? No, still even it is a testing stage. You do this way, this like that. So therefore, our objective will be there to ensure the regulator, lawmakers, that you make the law, it is your authority, and kindly review it, that is the result. Then you see what the loopholes. After happening accident, you are going to think. You are always reactive, not proactive. That's my only answer will be to you. Any society must be proactive. That is what this research paper, my friend, Argentinian friend, has said. That any government all over the world, because we are talking today here, transnational corporate governance. Of course, India is part of that, because 1/6 people are India. Therefore, it's a major part. But ultimately, these things are happening there. So we are not doing that. One law, before that, we're trying to do another way. I'm just trying to say, I'm concluding like that. Income Tax Act 2025 came into the already implemented. 31st July 2025, this was enacted in Parliament. Later on, got the assent of our Honorable President of India. Now you see, I understand with my little knowledge. Practically, only bearing few things. It is old wine, new bottle. When this law was enacted, introduced in Parliament, you see the object clause. Any act, there's object clause. Why this act is coming? And kindly, the researcher will ensure whether it is going to achieve that objective of new income tax. I mean the problems this newly introduced Income Tax Act. Then only I think my friend will get answer what I will say this one. There's a 515 clauses are there. That is all the reduced earlier 743 clauses are there. But clause something hardly matters. What is the impact? How is going to influence, have the impact on organization? How you're going to have this revenue collection? How going to make this one? Whether cost of earning is more or your cost of revenue is exchequer coming this way. But this object clause or the statement of reason was there. We are going to make user-friendly tax compliance. We are going to make compliance costs reduced, and we are going to many more taxpayer base we want to increase. It is not a matter of thing like that. 1.4 billion, I think it's more. Out of that, only 5 to 6 to 7% only tax base. That means what? Where is the problem lies? This is also part of governance. This part also legislation part. All together, no particular or single point cannot be made that because of this only you do. A holistic approach is required to ensure corporate governance, proper governance, generate investors' confidence, and confidence of society en masse. Because any company, any organization, it belongs to the mass, to the society as a whole. X, Y, Z, we are all part of the society. So therefore, our law-making system, implementation, and its testing result, impact, then only we can understand how effectiveness, efficiency, and economy. The three, knitting is a very important principles of management or governance in the organization. Economy, cost effectiveness, efficiency to do the right thing right, and effectiveness to do the right thing. So, but as a matter of fact, my address will be concluded here. To answer this question, we need to have more and more study, more and more people should be involved in this process before any act or any law. And law needs to be implemented properly, and you have to review it based on the feedback. Any law in our country hardly taken any feedback of anybody who are directly involved, associated. In our country, maybe 10,000 are registered companies, 10 to 15,000, not more than 15,000. So for all the 15,000, not possible also for legislature to consult all the board members, something like that. But make a sample even who are making the law. There's a gap between the lawmakers and the corporate, CEO or the managing director who are there. They say yes, they have got their association, having like that. But something somewhere, this forum, I think we cannot discuss so many things. I tried to,
great initiative, sir.
To show that the tip of the iceberg. But we can discuss many things are there. Ultimately, law is required. Law implementation is required. Its review has to be required based on the feedback. And then again, loopholes will be there. that has to minimize. Then only investor confidence, this minimization is possible, and corporate sector will be coming up. And whether it is foreign investor or domestic investors, investor needs return. There is no substitute of that. No charity is doing. It's a business model is required even for NGO also. Business is not that is a business. They will do service, provide service, but without money, without thing is possible. No, not possible. Therefore, that concept, and in this way, I want to conclude remembering Milton Friedman, Nobel laureate, capitalist economy. In 1972, he wrote a good article published in New York Times and Washington Post also. He said, business or business is business. Therefore, they have to do that, and government or regulator has to ensure that. It is not the charity. It cannot be done. But ultimately, government is coming bailout means what? It is only taxpayer. Again, we are going to government cannot create money. Tax is coming on that. That means somewhere something wrong, and those wrong needs to be addressed.
Dr. Mukherjee.
Sir.
Sorry to interrupt you. We need to conclude the session.
Yeah,
And we know, understand, it's a very vast, it's a very vast subject. And we will take care in future. We will do further segment-wise some sort of webinar. One is on what is the law says under the Security Regulation Act 2015, what the compliances related to the Corporate Companies Act 2013 is concerned, and other related legislative requirements for the business community, how good governance can be ensured. When I was in the council, I represented with the SEBI few times, and we have given this suggestion that yes, the listed company audit need to be appointed by the SEBI or independent other in place of the board of directors is concerned. Somewhere it need to be, SEBI is also thinking, papers are there with the SEBI on this issue. But now what is going on with the present council as concerned, I'm not aware, but I made this efforts that yes, appointment of the auditor in the listed company at least need to be done by the separate independent body, just like a CAG is concerned for the public sector entities as concerned. And we also recommended many times to RBI that yes, you need to get back this appointment procedure from the banks again with the RBI is concerned, because a lot of malpractices are going on nowadays. Few different of bad things comes in knowledge that yes, in appointment procedure with the board is concerned. So time will change. We are making our efforts. We will give representation on behalf of the ICPA to the Government of India, Ministry of Finance, Institute also. Yes, these issues need to be taken care. And there is today is very good discussion. We understand that within 1 hour 45 minutes we cannot cover all the entire subject as concerned. But we thanks to you for make this subject very live, and with the example as concerned, discussion on the role of the independent auditor, are the independent auditor are independent or not. Many questions you raised during course of your discussion is concerned. And we also thankful to our Dr. Praveen Jhaji, who is from Dubai, and our coordinator, our board member of the ICPA, and our organizer, Mr. Markan, Dr. Markan, from the media side as concerned. Thanks once again to all of you, and thanks to all participants taken interest in this webinar. Thank you very much.
Thank you very much for your kind words. Thank you very much.
Sir.
Thank you all. Thank you, sir.
We need to conclude. Thank you.
बहुत शुक्रिया, बहुत धन्यवाद ICPA इंटीग्रेटेड काउंसिल प्रोफेशनल अकाउंटेंट्स के खास इंतजार में आप सभी ने जो खास तौर से स्टैंडर्डाइजेशन और
डॉक्टर, आपकी आवाज नहीं आ रही.
और आगे
Unable to listen you.
जी साहब आपका बहुत बहुत धन्यवाद। परवीन झा सर आपका बहुत बहुत शुक्रिया। डॉक्टर मुकेश सिंह कुशवाहा सर आपका बहुत बहुत धन्यवाद। इस खास वेबिनार से जुड़ने के लिए बहुत बहुत शुक्रिया, बहुत बहुत धन्यवाद सर।
Thank you. Thank you, everybody.